This is the Asia Train. I'm Shery in Tokyo.
I'm Avril in Singapore. The top stories this hour. The U.S. facing a potential government shutdown as Democrats threaten to block spending after a second deadly shooting by ICE agents in Minneapolis. The yen hitting a 5-week high with traders on intervention alert. Prime Minister Takaichi warning of all necessary measures amid signs of possible U.S. backing. Also ahead, President Trump threatens Canada with 100% tariffs if it makes a trade deal with China. And we begin our live coverage from the Asian Financial Forum in Hong Kong with the city's Financial Services Secretary, Christopher Hui.
Take a look at how we're setting up for the Asian session with our eyes firmly on the Japanese yen. We're on intervention watch because of Prime Minister Takaichi's comments, not to mention that we actually have heard reports about the New York Fed contacting financial institutions about the yen. And we have seen that a rate check is usually the last warning sign before there's some sort of action. We're now holding at that 154 level against the U.S. dollar after the massive jump that we saw, the biggest since August. And of course, we continue to watch potential coordinated moves between the U.S. and Japan, and leading to more speculation that are we going to see something along the lines of the Plaza Accord from 1985, for example, for the past year. We've been talking about a potential Mar-a-Lago Accord. And the fact remains that given that Japan hasn't necessarily been able to solve the yen's issues, that potentially some sort of coordinated action is not necessarily out of the question. Take a look at the offshore yuan right now at that 694 level as well. But the onshore yuan also seeing its longest winning streak on a weekly basis against the U.S. dollar since 2018. Perhaps not that much of a heavy lift, Avril, given that we have seen this immense pressure on the U.S. dollar.
Yeah, this immense pressure also perhaps translating into a bit of softness when you look at U.S. futures and how they are starting the week really on the back foot here. Maybe that is going into assets such as gold, because we are seeing it, spot gold hitting 5,000 an ounce for the first time. So yet another record on the precious metal. And against the backdrop of what we're seeing in natural gas prices with the bad weather sweeping across the U.S., we have been seeing that rally there overall in energy prices, also given how traders are factoring potential military action by the U.S. in Iran. Now, you talked about the yen. Let's talk about the other side of the dollar-yen trade, the greenback. You have those concerns about the fiscal spending, domestic spending plans in the U.S., geopolitical risks. And given the threat of yen intervention, that's all kind of coalescing into this risk for the dollar to break below these multi-year lows. And certainly that is what you're seeing, the potential for that as we pass this chart. But certainly for the moment, you're seeing a bit of a pullback in terms of energy prices, and 10-year bond futures are ticking up just a little as we focus on developments out of the U.S. as well, Shery.
Yeah, really domestic politics also not helping, of course, the course of the U.S. dollar. Democrats now threatening to block a massive U.S. spending package unless Republicans strip funding for Homeland Security following another killing by ICE agents in Minneapolis. Saturday's shooting prompting the state's governor to call on President Trump to de-escalate the situation.
President Trump, you can end this today. Pull these folks back. Do humane, focused, effective immigration control. You've got the support of all of us to do that. Let our law enforcement continue to do what they do, making Minnesota one of the safest states in the country, one of the best places to live.
Trump has just posted on Truth Social saying 2 American citizens have died tragically and calling on Congress to end sanctuary cities. Let's bring in Bloomberg senior editor Wendy Benjaminson joining us from Washington. And Wendy, of course, we have heard the president now talk about the tragedies, but at the same time veer the focus to sanctuary cities and us looking at what's happening in America from overseas. The hundreds of videos of the violence by ICE agents were really shocked. Is there any way to de-escalate at this point? Hi, Wendy, are you with us? It seems that we don't have the connection to Wendy Benjaminson at the moment, joining us from Washington, D.C., but we'll continue this conversation on what's happening in America when it comes to this ongoing immigration crackdown in the U.S., Avril. But right now, when it comes to the markets, it's really about that focus on the yen.
Following on from those steep moves on Friday, post-BOJ, post-Ueda's commentary, suddenly the Japanese currency is in focus. Traders starting the week on heightened alert of Japan government intervention and speculation building after the New York Fed reportedly contacted financial institutions to conduct a rate check. We also had Prime Minister Sanae Takaichi warning of action on abnormal moves. Let's get more from our Asia Markets Executive Editor, Paul Dobson. So, Paul, let's start off trying to perhaps unpack the moves in the past two sessions, the steep climb we've seen in the yen.
Yeah, so, well, the steep climb, I think, primarily was the result of this agitation, this sense that maybe the authorities will step in and buy the yen, sell the dollar, in order to offer itself support, because I think in the immediate aftermath of the BOJ, actually the yen was pushing weaker again. It is a difficult balancing act for Ueda. On the one hand, he wants to control the bond yields, and he did give some explicit comments that the BOJ would step in there if needed. But of course, if you're trying to keep down yields, then all things being equal, that would be bearish, and that would be for the currency, and so that would, tend to lean against the yen or send a bit more of a dovish signal to the market. And so the commentary coming out of that was that the yen would be, under more pressure, and so I think that probably prompted this action that we saw in the US session, where we heard the sort of throat clearing in a pretty explicit way talking to the trading desks, and so that has people on edge. But the fact that we're moving further today, I think, speaks to the idea that people are already, kind of a little bit spooked about it, and so closing out positions, and so that's continuing to push the yen higher. But I think the other thing that's really interesting is looking at it from the other perspective. What does this mean for the dollar overall? It seems like right across the board the dollar is under pressure today. People taking it as being a signal that if the Federal Reserve of New York was involved, then maybe the US wants this to happen, and so therefore you see that heavier weight weighing across the US dollar complex.
Yeah, Paul, to your point, how unusual is it that the New York Fed is actually carrying out these rate checks with financial institutions? And what's the trajectory of the dollar when there's, again, more speculation about that potential so-called Mar-a-Lago Accord?
Yeah, so I think we would need to be really careful not to get too far ahead of ourselves. We've heard Mar-a-Lago Accord, Plaza 2 Accord talk several times. Nothing seems to have actually come to fruition from that. And we don't really have a very clear indication how far along we are with that. What we do know is that the Japanese authorities met with the US authorities, with Bessent, and had that sort of endorsement from the US side to intervene in markets if needed. Same for South Korea, for that matter, as well, because both of those currencies, longer term, have been under a good deal of pressure and weakening a long way against the dollar. So, at the very least, the US has given its approval. Now, the fact that the US side was doing the rate checks could be that they were acting as an agent for the BOJ, or could be that they wanted very clearly to say that they are in on this as well. It's not entirely clear and hasn't been communicated. But what it does tell you is if it were a dual-sided sort of intervention with the US there as well, then that would be something that we see very rarely. We see it in the aftermath of shock events mostly, and not in normal trading conditions. So it would send a stronger signal, I think, to the market that really this is a line in the sand that people don't want to see past anytime soon.
Paul, it's also this week the watch on the Fed and these big tech earnings. When the niche AI trade is really what's been fueling things, maybe a bit of an unraveling, unwinding on that. What are we watching in this week's earnings?
It's a good one. I mean, it's the same as always. What is CapEx plans going to look like, and how are they going to be able to pay for it? Can they afford it? What does the delivery times look like as well? We saw some delays on some of the data centers and things like that. So that big AI and tech rollout is what people are focused on as far as technology companies are concerned. And also, I think what we've learned so far about what the US economy looks like from the earnings reports is that people are pretty confident, right? It seems like the labor market has stabilized. It seems like the consumer is holding up. But, you know, any more indications that we get from that, and of course from the Fed as well, on what the outlook looks like, will be quite telling for the future path of interest rates and for the future path of the economy. So people will be keeping a close eye on those as well.
Yeah, we do have a few central bank decisions, including the Fed this week, of course, and also more data out of China. Anything in terms of economic policies that you're watching?
It's just slow drip, isn't it, from China in terms of economic policies. We've heard more commentary, at least, from officials that they want to do more to support the consumer. But what we really see is more efforts to support exporters. And that K-shaped economy that people are talking about, it's really, you know, two-speed economy is really sort of turning into a market theme as well as an economics theme now, where you see the stock market very clearly bifurcated, the technology companies, the new economy, the robotics, the exciting, you know, in new industries are really powering ahead in the market, whereas the, you know, consumer-focused equities, of course, the housing companies as well, and those kinds of parts of the economy still trailing behind. So anything that can turn that around, obviously, would be very good news overall for the market and for the economic outlook. But the fact of the matter is that it's very hard to see too much in that, and so data, you know, coming up will probably bear out more of that narrative. I think. All the same, you know, the equity market is looking reasonably good for China. We got the news on Friday about Nvidia being able to sell some chips into the mainland sometime pretty soon, which may give it another tailwind today. We've got the currency strengthening. You know, again, that weaker dollar story, to come back to where we were at the start, with the UN going through 7 on the fixing rate at the end of last week, gives the sense that that appreciation can continue as well.
Asia Markets Executive Editor Paul Dobson, always really great to get your insights as we start, of course, this very packed week. But back to our top story, U.S. Democrats threatening a potential government shutdown following another killing by ICE agents in Minneapolis. Let's bring in Bloomberg Senior Editor Wendy Benjaminson in Washington. Wendy, where does the country go in terms of de-escalating this ongoing immigration crackdown?
Well, it appears that we are at the point where we really where everyone is really agreeing that de-escalation is what needs to happen. After 2 Americans were killed during the protests in Minneapolis. Yesterday, the killing of this nurse really shocked the nation. With the video, you could see of him being on his hands and knees and subdued when the Border Patrol agents decided to shoot him. We are beginning to see cracks in the Republican wall. We've had 5 Republican members of Congress and a couple of Republican governors basically saying enough is enough. That it's fine if they want to capture and deport undocumented immigrants. That's, you know, that's the law of this country, but the rough treatment of protesters has to stop. That came from not only politicians, but 60 Minnesota-based businesses, and these are huge businesses like Target stores and United Healthcare and Cargill Agriculture. These are massive companies that also said it's time to de-escalate. So we may be at a turning point.
Yeah, on top of that, as you alluded to the pressure coming from Democrats, the criticism there, what is your sense of whether we are indeed headed towards another U.S. government shutdown with all these developments in mind?
Well, this all falls on the heads of the Senate. The House passed a spending bill that has full funding for Department of Homeland Security, and now it goes to the Senate. And Chuck Schumer, the Democratic leader, has said no Democrat will vote for the bill unless there is far less funding for Homeland Security and ICE and Border Patrol. And there are some reforms, such as body cameras for the officers. Now, they just need a few Republican senators to go along with them, and they may be able to pass a bill, but then it would have to go back to the House. So there may be a brief shutdown. But I think what's more important is that Schumer is also saying we don't want a shutdown. We are willing to pass funding bills for the rest of the government. It's just the Department of Homeland Security, and within that large agency, it's just the Border Patrol and Immigration and Customs Enforcement that need the reform.
Wendy, thank you so much for providing these insights for us. Always appreciate you taking the time. Bloomberg Senior Editor Wendy Benjaminson. Now, coming up on the Asia trade, UBP gives us their outlook for Asia's trading week ahead. We'll get analysis from New York University as Japan's political parties gear up for a snap election. Plus, we're live from the Asian Financial Forum in Hong Kong, where the city's Financial Services Secretary will be joining us. More ahead. This is Bloomberg. The U.S. Central Bank will be top of mind for traders this week. The Fed expected to keep interest rates unchanged amid global economic uncertainty and pressure from President Trump. Peers in Canada and Sweden also likely to hold rates steady. In Asia, we'll be getting fourth quarter inflation data from Australia this week. The report could underpin the RBA's hawkish bias and spur speculation over a potential rate hike soon. We'll also get a slew of economic data out of Japan on Friday, including Tokyo's CPI data for January, and this could give the BOJ room to proceed cautiously, although Bloomberg Economics still sees a hike in July. That's your week ahead. Now let's get more on the outlook for Asian economies. Joining us now is Carlos Casanova, Managing Director and Senior Economist for Asia at UBP. So Carlos, we've run through a number of events we're watching that could shape markets this week. But talk to us first about what your takeaway from the BOJ and the comments from Ueda last Friday were. Do you see it as tilting hawkish? Are you expecting an early rate hike now?
We continue to expect a rate hike in June or July, so definitely a hawkish pause. We've seen markets moving in too quickly to price in a lot of fiscal stimulus after the snap election. And the truth is, we won't know for sure until that happens how large the fiscal package is going to be. If you look at it fundamentally from an economic standpoint, you have terminal rates in Japan that should reach 1 to 1.25%, and inflation that should reach around 1.5 to 2% in the long term. That's where potential inflation is heading. And so rates are toppish given that current scenario. And the other way to look around it, of course, is if there's a shift up in nominal GDP and you have inflation above 3% and growth at 1% for many, many years, then you should continue to see 10-year yields up. But that is a structural shift that hasn't happened yet. We need to see constitutional reform in Japan. We need to see much more fiscal stimulus after the election. So I think the market is getting a little bit ahead of themselves, and that's what Bank of Japan is worried about. And that's why we saw that likely intervention on Friday to try to curb the pace of Japanese yen depreciation against the US dollar close to that level of 160, which is, of course, that psychological line for the BOJ. And we think that this balance between fiscal policy and inflation and the need to continue normalizing rates is going to define the volatility around the JPY in the months ahead.
What are the risks for the BOJ if it waits until June, July, as most in the market still seem to be expecting for it to next pull the trigger on a hike? Might that send the terminal rate even higher then if it waits?
Yeah, absolutely. That's a really excellent question. There are inevitably risks. The market is certainly trying to test the BOJ, both in terms of their tolerance for higher yields and also in terms of how weak the currency can go before they intervene seriously in the market. And as a result of that, we could see much weaker much stronger US dollar against the JPY, much weaker JPY fueling imported inflation. And that is going to be problematic for Bank of Japan because sure, they're going to wait until June or July to continue normalizing rates, but following from that point onwards, they're going to have to lead terminal rates to a higher level. And that would constitute a structural shift, like I was discussing earlier, that would essentially force the entire yield curve to shift up and steepen more than what's currently happened in the market.
Carlos, but you don't see that as already starting to happen because we have seen, of course, the chaos caused last week. The JGB space has stabilized, but during that massive sell-off, people were talking about this being Japan's Liz Truss moment. At what point do the debt risks in this country become a structural issue?
I think that we will cross the bridge when we get there. The volatility was a clear reaction to the Prime Minister's decision to call for a snap election only 3 months after she took office. So the market is, really speculating that she feels like she's going to secure a really strong mandate, and the fiscal package is going to be stimulus. The last round is adding 0.2 percentage points to GDP in 2026. But if they announce a much larger fiscal package with constitutional reforms that allow increased defense spending, we could be looking at up to 1 percentage point of GDP in additional boost, in additional growth. So that's what the market is trying to price, but we are not seeing that yet. And if she secures a stronger mandate, she may be inclined to do less fiscal support because she doesn't have to appease other factions within the coalition in terms of addressing affordability of food and utilities for households in Japan. She can focus solely on the defense component, which is really what her party is most interested in. So I think that we have to cross the bridge when we get there. The market is really trying to get ahead of themselves right now.
Yeah, we'll be watching the election campaigning starting on Tuesday. This week also, we're expecting the Fed not necessarily to do anything in terms of rates, but will it have implications for Asian economies, especially at a time when the dollar is, of course, after seeing its worst week since May or so?
Yeah, the dollar's been fairly weak, and there's a worrying consensus within the financial circles, at least in this part of the world, that 2026 is going to be a year of US dollar weakness. So, we could see some of that unwind a little bit in the days ahead. Our view for the Fed is a little bit more dovish than what the market is expecting. From a macro standpoint, the Fed just doesn't have enough visibility on the labor front to justify a pause. In January, yes, but we think that they're going to cut in March as a result of labor market uncertainty. The last sort of batch of data is still skewed from the previous government shutdown, and so the Fed, unfortunately, does not have enough visibility to safely assume that the labor market has stabilized in the U.S., even though there are some signs that this is taking shape. In the second half of the year, we expect inflation to normalize back down towards 2.5%. We see that pass through from tariffs peaking in the first quarter of this year, and that should pave the way for the Fed to continue to cut rates in the second half. And last but not least, there's a political factor as well. There's going to be a change in governance at the Fed, and that's dovish in nature. And so we do think that terminal rates reach 2.75 from here.
Carlos Casanova, always good to chat with you. Thank you. Managing Director and Senior Economist for Asia at UBP. We do have more ahead. This is Bloomberg.
We continue tracking energy prices with bad weather gripping the U.S., this Arctic blast that's delivering freezing air, and oil and natural gas prices surging in tandem. Natural gas actually surging 16%, and against the backdrop of this climb in energy prices. This is Bloomberg.
And we're about half an hour away from the market opens in Japan, and you can see Nikkei futures at the moment losing ground more than 2% after 2 sessions of gains. And of course, what we'll be watching is also the JGB space after we saw those ructions last week that wiped out around $41 billion in the Japanese yield curve. The Japanese yen strengthening against the US dollar, that 155 level against the greenback, and this after that biggest rally since the summer. We're at the highest level since December, 5-week high versus the greenback. We had some comments coming from Prime Minister Takaichi, not to mention, Avril, that we have heard that the New York Fed actually contacted financial institutions. So those rate checks that we get are usually the last sign before intervention.
Yeah, before they really pull the trigger on actually stepping into the markets and perhaps buying yen. Let's bring in our chief FX and rates correspondent in Asia, Ruth Carson. So, Ruth, what's the mood across trading floors, and how are traders positioning when it comes to dollar yen?
The game has changed. If I can put it into simple terms, the game has changed. The fact that it wasn't just so-called rate checks that were made in the market, but reports coming that the New York Fed actually did it, it sends an incredibly powerful signal to the $10 trillion a day currency markets that things may be shifting. It was not seen as a possibility by many traders by Thursday, Friday last week. So for this to happen, that, the rate checks supposedly came from the New York Fed side and not the BOJ and not Japan, it basically is sending a very powerful signal that the US is watching not just dollar yen, but what's happening with the dollar. So investors are definitely game planning the impact as we see it right now, as I'm speaking right now, across currency markets.
Yeah, you can see the yen strengthening still, but interesting to me is that we're still back again above 155. So I wonder how long this strength in the yen will last. And also, given the weakness of the US dollar on the other side, we're coming off the worst week since May or so, what other currencies could potentially have more to gain at this point?
Yeah, if we use the WCRS function on the terminal, you can tell that the dollar has actually slid against every major currency in the world. Absolutely, yen is leading the way, and no surprise there, given all the intervention talk and the risks there of, hefty governments coming in to bolster the yen versus the dollar. But this is a much wider story beyond the yen now. Every major currency across Asia, Europe, US that is trading right now is gaining against the dollar and gaining very, very fast. Now, it's only 8:30 in Singapore, so 7:30 in Singapore or so. So we've got a full trading day ahead. We have to wait and see if this actually continues to entrench as a trading pattern. But definitely all the traders that I'm speaking with are on edge.
So what are we expecting when Japan rates trading begins in about half an hour from now?
That's the other side to the equation, isn't it? What's going to happen to JGBs? What's going to happen to treasuries as well? Again, I'm sure all the macro guys are talking to each other right now. Remember that a stable yen will also help stabilize JGBs. So there is that feedback loop, so to speak. And from that, because Japan is the rates anchor to the world after so many years of record low interest rates, the fact that things are stabilizing, is it a BOJ put? Yeah, it's one thing that was actually discussed in markets. JGB should stabilize, and as a result, that should mean that global rate volatility should ebb as well. Now, how long this lasts? Well, I wouldn't even say days. Let's look at what London does when they come in.
Yeah, and to be fair, treasuries were little changed on Friday already, right? Ruth Carson, good to have you with us, Chief FX and Rates Correspondent in Asia. But really, no stability when it comes to the trade conversations globally. That trade rift between the U.S. and Canada widening as President Trump threatens 100% tariffs on Canadian goods to the U.S. if Ottawa makes a trade deal with China. For more, let's bring in our Chief North Asia Correspondent, Stephen Engel, in Hong Kong. And Steve, we all know about President Trump's tariff threats, right? The tackle trade very much always in focus. But at the same time, this seems like a big escalation. It puts Canada at a really, really awkward position vis-a-vis China as well.
Well, Mark Carney did not, he made those comments very deliberately in Beijing, a week and a half ago, when he essentially said the new world order. He was very deliberate in his verbiage, if you will, and his cadence. And we all talked about it at that time, saying this is going to, elicit quite a response from the White House, because essentially what they did is they didn't strike a free trade agreement. And that is something that the Canadian trade minister in charge of U.S. trade essentially said, that's Dominic LeBlanc. He said, we're not pursuing a free trade agreement with China. What we did essentially was resolve some outstanding tariff issues, in particular on EVs to Canada, which Canada had put 100% tariffs on. They reduced that to 6.1% on 49,000 cars. In exchange, China basically reduced its 100% tariff on rapeseed or canola. And those were outstanding issues. So it's not, according to the Canadian ministries, not a free trade agreement. But of course, it could potentially lay the groundwork for further deals between Ottawa and Beijing. And that's sort of what the U.S. officials are saying. Trump essentially says China is going to come in and eat Canada alive, completely devour it, including the destruction of their business, social fabric, and general way of life. He says, again, Trump in social media posts, if Carney thinks he's going to make Canada a drop-off port for Chinese goods, he is sorely mistaken. So again, this is going to battle, right? The battle is a battle of words right now. We'll have to see whether he follows that up with that threat of putting 100% tariffs on Canadian goods. Because keep in mind, these two economies are highly intertwined. America buys a large portion of Canadian oil, metals, fertilizers, not to mention auto parts.
This harsh rhetoric from Trump also seems to be followed up by his Treasury Secretary, Scott Bessent. What are we hearing?
Yeah, so he's sort of doubling down on those comments from his boss, Donald Trump, and essentially saying if these trade agreements that were reached in Beijing with Mark Carney and Xi Jinping, if they go beyond the original scope that Dominic LeBlanc said, then there could be further action, not only more tariffs on Canada, but also more penalties against Beijing, including tariffs. He also, Scott Bessent, essentially alluded to that, the negotiations for the U.S., Mexico, Canada free trade agreement could be renegotiated by this summer. But he did not necessarily specify if these latest developments would have an impact, but you could probably imagine they would. This is what Scott Bessent had to say.
We have a highly integrated market with Canada, sometimes in autos, which he dropped the EV tariff, I believe, from 100% to 6%. The goods can cross the border during the manufacturing process 6 times. And we can't let Canada become an opening that the Chinese pour their cheap goods into the U.S.
Yeah, this story is not going to go away as long as, again, Mark Carney is engaging with Beijing, and Donald Trump always tends to use that threat, that lever of negotiation with tariffs.
Steve, thank you. This unfolding story, Chief North Asia correspondent Stephen Engel for us. Now, in the meantime, also hearing how the Canadian Prime Minister Mark Carney will visit Australia in March after he delivered a blunt message at Davos calling on so-called middle powers to work together. He'll address Parliament during his visit. Australian Prime Minister Anthony Albanese told ABC's Insiders on Sunday. When asked if he endorsed Carney's comments, Albanese says he agrees with him and that Australia can be a stabilizing force. China's top general is reportedly accused of passing secret information about the country's nuclear weapons program to the U.S. According to the Wall Street Journal, Zhang Youxia is also accused of accepting bribes for official acts, including promoting an officer to the post of defense minister. The report goes beyond China's announcement on Saturday that it was investigating Zhang. A massive winter storm hit the U.S. Atlantic coast on Sunday, bringing heavy snow and ice, straining electric grids and grounding thousands of flights. Parts of Texas and the Mid-South were coated in freezing rain, enough to take down power lines. More than 1 million homes and businesses across the U.S. lost electricity, mostly in Tennessee, Mississippi, and Louisiana. The storm has also forced more than 17,000 flight cancellations so far. We have more ahead on the Asia trade. This is Bloomberg.
It's time for Japan Ahead as we continue to watch the Japanese yen, which is at the strongest level against the U.S. dollar in about 5 weeks. It comes after the biggest jump since August against the greenback. We're on the intervention watch after Prime Minister Takaichi warned of action in abnormal yen moves. And traders also reporting that the New York Fed had contacted financial institutions to ask about the yen. Nikkei futures at the moment dropping more than 2%. We had seen 2 sessions of gains for Japanese stocks already. We are seeing JGB stabilizing the last few sessions after that big sell-off that we saw earlier in the week. And all of this, of course, to do with the upcoming elections now slated for February 8th. Japanese Prime Minister Sanae Takaichi has dissolved the lower house of parliament and called that snap election for February 8th. She's looking to boost her razor-thin majority and consolidate power. Takaichi is counting on strong approval ratings to pursue her economic agenda, including a temporary sales tax cut on food. Campaigning starts on Tuesday, and inflation is likely to weigh on voters' minds as they head to the polls. Joining us now is Amy Catalinac, Associate Professor at New York University. She specializes in Japanese politics. Amy, really good to have you with us. We have, of course, seen the dissolution of parliament in Japan, and then we're headed to the polls February 8th. And this could be, a record short time between these two measures. What does this tell us about how well the Japanese public will actually be informed before they need to cast their ballots?
Yeah, I think you've put your finger on it. They have a very short amount of time. So we have the formation of a brand new party last week, which really does present a potential alternative to the LDP and the Japan Innovation Governing Coalition, but they have such a short amount of time. The official campaign period in Japan is only 12 days. So as you said, campaigning will start on Tuesday, and then a week and a half later, they're voting. So I think that really does present a major hurdle for this sort of new opposition party to make its case and make its policies known to voters. So, yes.
Yeah, let's talk a little bit about the centrist Reform Alliance, because that's a new variable with the former coalition partner Komeito siding with a major opposition party, right? What changes does this bring?
Yeah, so so it's sort of it's a very big deal that this party has been formed with the LDP's former coalition partner. So the LDP was in coalition with the Komeito for 26 years, and the Komeito was providing a lot of support for LDP politicians in their individual election campaigns. It was said to provide between 10,000 and 20,000 votes in many individual LDP politicians' districts. And they suddenly decided to walk away from the coalition just when when Takaichi was elected leader of the LDP. So they said, we're drawing a line under all of the cooperation we've done before, and we're walking away from the coalition. And so that was really a big shock for Prime Minister Takaichi. She was able to form this new coalition and become Prime Minister. But now that party is saying we're going to team up with the largest sort of centre-left party, the Constitutional Democratic Party of Japan, and form this new centrist Reform Alliance. So this is it's not, a new party has formed before. Most recently, there was a new party formed in 2017. But the fact that the LDP's former partner of 26 years is now going to be coordinating with this new party is definitely a big deal. And that could shake up things, Japan's political landscape significantly.
It is a big deal, yet it is also an untested dynamic. To what extent is your assessment that voters will channel their frustrations with the LDP into actually voting for the opposition?
Yeah, I think they have sort of pretty big hurdles. So one hurdle is what was just mentioned about the very short campaign period. So they are championing sort of centrism, respect for individuals, respect for gender equality, multicultural society. So they do have, and they have some tax policies that are going to be popular, although the LDP is sort of bandwagoning with the same, they're offering similar tax policies now. But they have this hurdle if they only really have 12 days to make everybody aware of who they are. And if you compare that with the LDP has been in power almost continuously for 70 years. So voters have been hearing about the LDP for 70 years and about Prime Minister Takaichi's name for at least the last 3 months. So it's a very big hurdle that the Centrist Reform Alliance has to sort of overcome. If they can kind of focus, so they have some policy issues that I think may be vote winners, one of which is sort of money in politics. So the LDP has presided over, there was a slush fund scandal associated with the party, and in 2024 lower house election, this was what really chipped away at the LDP's majority back then under Prime Minister Ishiba Shigeru. And then also this was sort of the reason the Komeito left the coalition with the LDP back in October, whatever. So if the opposition, potentially they may focus attention on money in politics, and if they can do that, then that may be something, an area where voters already have some knowledge of, and that could be something that, boosts their popularity. But essentially it's an uphill battle, I think.
The whole idea with Takaichi calling the election early was to capitalize on her popularity. At least that was what opinion polls were telling us. Now we're seeing that some of these polls showing her approval ratings falling. How much weight are you putting on these polls? What is that going to mean for her risk going into the election?
Yeah, I think Takaichi is really in an extremely enviable position. I mean, her support rates have been consistently extremely high, and I think that's going to do quite a lot for her in this election. Unless something kind of dramatic changes about the situation, I think her support rates is just very high. It's likely to the extent to which some of her party's supporters were considering leaving the party, which was something that was discussed. This happened in the last upper house election last summer, and then in the lower house election 2024, some people were annoyed with the party, they were potentially leaving. Her stances are very likely to be able to bring those people back into the fold, and she's very popular with people who don't always make the effort to go out and vote. So I think in this election we're likely to see sort of people who don't always vote turning out and supporting her, and we're also likely to I would expect that she's able to win some of those people back who usually vote LDP and were maybe voting elsewhere last year. So I think the support rates are leaving her in a strong position.
Which is really interesting because we continue to struggle with the rising costs of living here in Japan, and BOJ policy in focus as the yen continues to, let's say strengthen a little bit the last few days, but still we're very close to that 160 level, which does not help Japanese households. How much is this in focus in voters' minds?
Yeah, so cost of living concerns are absolutely preeminent in voters' minds, for sure. And there are voters who are very unhappy at the very fact that she's calling an election because they want her to focus on alleviating their cost of living concerns and putting in place these measures that she's been talking about to fight, inflation. And they think, there are some people who are sort of thinking, why is she calling an election? She should be enacting the budget for this year, which needs to be passed by March 31, or traditionally always has been passed by March 31. So there probably will be some voters who will be annoyed with her and unhappy with this decision. But she's likely calculated that even if she loses some people who are seeing the election as potentially just self-serving for her or unnecessary, even if she loses some of those people, she's likely to gain other votes from people who are just happy with her performance as Prime Minister and don't know enough about the opposition, the new opposition party. And they think, well, we've been governed by the LDP for a very long time, and people may think that the LDP is their best bet. So, yeah, I do think she will be losing some votes, but she also will be gaining other votes by her sheer popularity and the fact that she hasn't presided over major areas in the eyes of voters.
Amy, great to get your insights. Thank you. Amy Catalinac is Associate Professor at New York University. Now, catch Japan Ahead every Monday at 8:40 a.m. if you're watching in Tokyo, and subscribers can watch live on the terminal using the TV Go function. This is Bloomberg.
We're seeing JGB futures on the 10-year rising at the moment ahead of the market opens. Investors in Japan remaining on guard as market sentiment stays fragile in the run-up to the February 8 election. This, of course, after we had that bond market meltdown last week that sent yields tumbling, yields soaring. Let us get more from our senior stocks reporter Hideyuki Sano with the latest. Hide, so when we have yields at just record highs. It's not really going to bode well for the state of the stock markets when you think about what's appealing to investors.
Exactly. And it's interesting because initially investors thought there was almost as if no cost to Takaichi's policy. But after the bond yield has spiked to, for instance, the 40-year yield rising up to above 4%, investors realized that there might be some costs to equity investors as well. And even bank shares, which normally benefit from higher yields, fell last week precisely because of this higher volatility in the bond market. And if you look at the currency market as well, yesterday or Friday we had a major gain in the yen because of worries about intervention. Now, the yen has been weakening precisely because of Takaichi's policy. Investors think that her policy might be very expansionary, and that's causing the yen to weaken. So again, we're likely to see some volatility in the yen as well as in bonds, and that's normally bad things for stocks.
Hide, we are seeing JGB futures pointing to upside, though, so maybe a bit of reversal from the elevated levels on yens. But can you just quickly talk to us about the setup into trading today, given the steep climb in the Japanese currency?
Yeah, so this morning we're likely to see a fall in Japanese stock prices, and currency traders are very nervous about the possibility of yen buying intervention by the Japanese currency authorities. So today we're likely to see a bit of a risk-off move in Japanese markets. That may continue for at least a few days, and we need to see what kind of stance the Japanese authority is going to take in.
Right. Hide, thank you so much, our senior stocks reporter, Hideyuki Sano. Now, quick look at how futures are shaping up before markets open in the top of the next hour. There you go, Nikkei futures pointing to steep declines at the open. This is Bloomberg.
This is Asia Trade. We're counting down to Asia's major market opens on this very busy week. This is early Monday session in Asia as we continue to watch the Japanese yen after that rally that we saw. The biggest gain since August, Avril. On a very busy week, as I mentioned, we are expecting the Fed to hold rates steady. We do have other 3 central banks, including Brazil, Canada, and Sweden, also expected not to move.
Yeah, speaking of the U.S., it was interesting how on Friday the New York Fed conducted that rate check, which is seen as a pretty unprecedented move and perhaps also foreshadowing actual intervention. The idea that now Japan has the U.S. on board when it comes to intervention, Shery.
It's really interesting. In the last hour, we were speaking to our colleague Paul Dobson, who was saying, don't get ahead of yourself and talk about, the Mar-a-Lago Accord or the Plaza Accord 2.0, where you're seeing coordination between the U.S. and Japan when it comes to the yen and the dollar. But at the same time, given that Japan hasn't necessarily been able to solve the issues with the yen's weakness, some analysts are saying, you know what, coordinated action might not be necessarily out of the question. Right now, you're seeing the yen strengthen against the U.S. dollar at that 155 level, but even that strength, which was much more earlier in the session and was below 155, we're now past 155 again. So how long will this weakness in the or strength in the Japanese yen hold is a key question when we're coming off the back of the U.S. dollar seeing its worst week since May, right? So you can see the Nikkei at the moment, Avril, also losing more than 1.5% after 2 sessions of gains already.
Yeah, and this is all coming against the backdrop of, as you mentioned there, the yen strength to stabilize things, perhaps what we've been seeing from policymakers. This is, of course, speculation. We won't know whether Japanese authorities actually intervene until much later. But to some of our colleagues' points earlier, once you get that stability in the Japanese currency, that could also mean stability in JGBs. And certainly the way in which the long end declines played out last week, the selling in JGBs on the long end, the extent in which this helps to bring some calm back to the markets. But then you put that together with a couple of these cross currents, I suppose, given how Takaichi is perhaps going full speed ahead with her spending plans, the Japanese are going to have to fund that somehow. So that could mean that the fundamentals come back into question when it comes to Japanese government debt, Shery.
Yeah, which is really interesting because we do have campaigning starting on Tuesday here in Japan, and we'll be watching any more rhetoric on that spending that you mentioned, Avril, and what the government will need to do to try to perhaps even stem the weakness of the Japanese yen, given that this is really not sitting well with voters, right? A cheap Japanese yen just makes it much more difficult on Japanese households. Take a look at how South Korea is also coming online because the Kospi was at record highs last week. The Korean won was pretty steady, and you can see this market continuing to rally. And what a year it's been for the Kospi, right? We're talking about 95% plus gains in the past 12 months. The Kosdaq index gaining more than 1.5%. A lot to do with the whole rhetoric around semiconductors and chips. And you can see Samsung Electronics gaining 2.5%. We had heard earlier from the Daily, this is a local newspaper in South Korea, talking about how it will supply HBM4 to Nvidia starting in February. So you can see a little bit of that pop right there. And the Korean won also strengthening, Avril.
Shery, we've been talking about these nuances when it comes to the Japanese currency. Suddenly it's going to be in focus as traders start the week. You know, this heightened alert of government intervention. Let's bring in our executive editor for markets, Paul Dobson, back in the studio again. So, Paul, you were talking to us about the setup coming into the start of the trading session today. We are 3 minutes in. Is that playing out as you anticipated? That stability from the yen also helping to calm things down in the JGB space, but that drag in stocks.
Yeah, so a stronger yen would be negative for the stock market. It doesn't help exporters because of the way that it changes the pricing of their goods. So there's that, and I think just also the extra element of doubt that we have over the entire market. After we had the BOJ, we've got the election coming, and now we've got the currency in a little bit of flux. So, yeah, you know, you'd expect to see some of that pressure bearing out. But it does seem like the currency market, after that initial sort of big lurch lower in dollar yen, has come back a little bit, has stabilized somewhat, but it feels quite fragile piece at the moment. I think the market is on edge, waiting to see what we hear next and what more we can learn actually about who exactly is orchestrating the behind-the-scenes moves, what sort of a level of coordination there is between the US and Japan. You know, there's a bit of a vacuum of information there, and I think that depending on what that looks like could be quite a strong determinant for what actually the currency market does in the longer term.
Yeah, it's interesting to me to see that the Japanese yen is paring back those earlier gains, as well as we're hearing from Japan's Mimura, of course, who's a top yen or FX chief here in Japan, saying that they're keeping a close contact with the U.S. on foreign exchange. And of course, this also coming at a time when we have significant weakness on the U.S. dollar. We're talking about the worst week since May. On the other side of that trade, you actually have the Malaysian ringgit, for example, gaining to the strongest since 2018 against the dollar. So, Paul, as we're listening to Mimura as well at this moment, talking about that he can't comment on whether they intervened in the market, but they're keeping a close contact with the U.S. on Forex. What's your perspective on where the Japanese currency and other Asian currencies go from here? Because you have both the weakness of the U.S. dollar, but also the strength of the Japanese yen pulling back and the Fed rate decision this week. I'm sorry, did I complicate matters? There's really a lot of things to keep an eye on this week as well.
It is, isn't it, Shery? But I think, from the Japan's perspective, they're in a very difficult situation because the bond yields have been rising so rapidly, particularly at the back end of the yield curve, that's a source of discomfort locally and globally as well. The US doesn't really want it to be pushing up treasury yields and causing those ripples right across fixed income markets. But if the BOJ were to put in place measures to try to keep a lid on those yields, then that may work against the yen, may be bearish, may be taken as a sort of dovish signal from the BOJ. What it could do is raise interest rates a little bit more aggressively and signal that it's going to do a whole series of hikes. That would support the yen and probably bring down those longer-term yields because it would show they're more mindful about inflation. But, of course, then it has the risk of causing more disruption in the economy by doing a more aggressive tightening. So no easy winners there. And what we've seen from them so far is that they are not particularly aggressive or in a huge rush. Yes, they're on a steady trajectory to try to raise interest rates. And they want, some inflation to remain in the economy given what they had to deal with no inflation over the past 2 decades. But I do think that on the flip side of this is where the interest is really much more for me right now. On that dollar debasement trade, on the weaker dollar, like against everything, and this idea that we had, that we were talking about on Friday about quiet quitting of US assets. It's not necessarily that everybody's leaving the US markets en masse, but putting a little bit of money out of US markets, putting it into other allocations all around the rest of the world, including in our regions, of course. That helps the currencies, it weakens the dollar, it also helps emerging market stocks and bonds, which have been performing strongly at the start of this year.
The quiet quitting concept, one that the younger generation, I think, very familiar with. But when it comes to cross assets in the US, stocks always seem to find a way to rebound, right? I mean, how does tech earnings this week perhaps inform the trajectory?
Yeah, it's true. US stocks do find a way to rebound, but they're underperforming still against the rest of the world. So, keep that in mind. And the Chinese tech, for example, is really in the vanguard. You were just talking about the Kospi as well. I think, the tech earnings are still going to be a big area of focus. Of course, the Magnificent Seven also has not been leading the way for US stocks recently. It's been the small caps. It's been that idea of a rotation trade out of the market leaders and into the rest of the market. That breadth gaining has been a good thing. But in order to win over that enthusiasm again for the Magnificent Seven, for the big tech companies, the market needs reassurances that they're going to be able to monetize AI investment, they're going to be able to fund it at reasonable levels, they're going to be able to build it at the pace that they envisage, and that it's going to have useful and practical uses, and they're not going to end up with a lot of white elephant investments, which is the big concern. We might be in some kind of a bubble, we might be in some kind of an industrial revolution, but almost certainly not all of the companies are going to come out of this as winners. And so maybe more differentiation between them, which is a theme we started to see emerging over the last 6 months or so, would also be something that would be interesting to watch out for.
Paul? Always fantastic. Thank you so much for talking us through all these market nuances again. Asia Markets Executive Editor Paul Dobson. Let's take another look at how U.S. assets are faring now that we have treasuries up and running. We were expecting a bit of that reversal of the pressure, I guess, on U.S. treasuries. But where the pressure really is still showing up is in U.S. stocks. Of course, we have been seeing these concerns about domestic spending, geopolitical risk, kind of all playing out in the flows into safe havens. Look at the way gold is just pushing up even further above the 5,000 handle. And of course, with the bad weather gripping the U.S., that is the surge you're seeing playing out in natural gas futures, almost 18%, Shery.
Yeah, and pushing higher also the Japanese yen at that 154 level now against the U.S. dollar, as we're hearing from the chief FX official here in Japan, Atsushi Mimura, saying that he can't comment on talks of rate checks, that they're keeping a close contact with the U.S. on foreign exchange. And you can see right now that given the strength of the Japanese yen, some of those exporters like Toyota and Sony are gaining ground. Nintendo are losing ground. Of course, it becomes less competitive for some of these exporters. If you have a stronger Japanese currency, a whole different story for Nintendo out there, up 0.9%. We have more ahead on the Asia trade. This is Bloomberg.
Let's take you to Hong Kong now, where the annual Asian Financial Forum begins in the city today, bringing together global policymakers, business leaders, investors to discuss the key themes shaping the global economy. Bloomberg's China Show anchors David Ingles and Yvonne Mann are at the event. Set the scene for us, guys.
Yeah, it's a very exciting one for sure, Avril, because you talk about the year that Hong Kong has had. I mean, basically when it comes to this recovery in the IPO market, they regained the #1 top spot last year, and the pipeline continues to be quite strong. We're talking about 350 companies set to list as well. So certainly there's a lot of optimism as we count down to this AFF this year. The chief executive we're hearing, John Lee, is set to take the stage any moment now. Also, the PBOC Deputy Governor, Joe Lan, is also here in town too, Dave. So there's a lot to talk about this week.
There's a lot, and really the market environment has really given an opportunity here to have all these conversations, right? And I think you mentioned the IPO market, how that looks like this year, number one, the 15th five-year plan, for example, and how Hong Kong aligns along those plans with the mainland. And of course, this resurgence of alternatives, right? Whether we've talked about private credit for several months and if not a few years. What's re-emerged too is precious metals, right? Things like silver and gold, and how does really Hong Kong bolster its sort of commodities portfolio as we kickstart 2026. In fact, joining us now to talk about all those initiatives and even more perhaps, joining us here on set is Christopher Hui, Hong Kong Secretary for Financial Services and the Treasury. Good morning, and very, very nice to see you. And I mean, the timing perhaps could not be more perfect to talk about all these things. But from your perspective, what are the government's priorities this year?
I think insofar as financial services, we are focusing on 3G, I would say, in the priorities. Number one is growing the competitiveness of our market, including on the capital side and also the asset management side. On the capital market side, we're going to review our listing rules, including the arrangement right now for the listing of weighted voting right companies. And at the same time, we are going to bring the clearing cycle of our stock market from T+2 currency to P+1 and get the market ready for that. And on the asset management side, we are going to enhance our current tax concession for funds and also family offices to include digital assets, private credit, and also carbon credit. So there's something that already we are consulting the market. And another thing that we're working on asset wealth management is on the corporate level in terms of reviewing our current laws applicable to the corporate treasury centers. So all these are grouped under the first G, I would say, growing the competitiveness of our own market. The second G, I would say, is about gold, because I think gold right now is really a topic for everyone, globally and regionally. And we are going to sign an agreement with the Shanghai Gold Exchange later on at this forum to highlight the fact that we are cooperating with them to set up a government-owned clearinghouse in Hong Kong for OTC gold contracts. And the third G that I would like to cover is about helping Chinese companies going global. Because after all, as you can see, the immense competitiveness and also productivity of Chinese companies, in fact, is getting a lot of credibility regionally and globally. And Hong Kong being a professional service center, not just financing, but even legal, accounting, and others, basically is a perfect platform to help these companies going global.
Yeah, I mean, it's been so strong even just the start of the year, right? 11 IPOs. I think they've raised already $4 billion just the
We're
first
not even done with January.
weeks of this year. You mentioned about finding the right companies to list. Our sources are hearing that from the CSRC and regulators are a bit concerned over the deal quality of some of these mainland companies listing here in Hong Kong. What have you heard so far? Any signs, if any, of tightening?
I think, as you said, we are yet to finish January. We already have 11 listings so far this year. And also we have a very strong pipeline of more than 350 companies awaiting. So if you look at the figures, basically, like the last year compared to the year before last, in terms of the number of new listings, we have almost like 70% increase. But in terms of IPO proceeds, we actually see a almost 2 times increase. So you can see that the companies that are seeking this in Hong Kong are getting bigger, and also the offerings are also bigger as well. So on that front, we have been seeing a strong pipeline, as I highlighted, and also we have been maintaining constant dialogue with our counterparts in the mainland to make sure that Hong Kong is the right platform to serve both mainland companies as well as global companies to list and also seek financing.
So we haven't heard anything from your perspective on potential tightening around some of the requirements to list here in the city?
As I said, I think this constant dialogue is ongoing because it's something that is very important to Hong Kong, and at the same time, this part of our market development in terms of enhancing our appeal to global and also regional companies.
I mean, the SFC did complain last year about these shoddy applications that, sometimes are just kind of incomplete, placeholder sort of things just to get into the IPO process and get the approval from China. I mean, do you share that sort of concern that there are some substandard companies that are listing or at least filing listings here?
I think fundamentally, Hong Kong is not just an international market, but a quality market.
Right.
So the quality of our financial regulation, I must say, is international level. And that's why it's always on our agenda into how regularly and ongoingly we can improve our competitiveness and the quality of financial regulation. And as you said, all these efforts basically come in different fronts, including the reforms I just highlighted and also other ongoing regulatory efforts.
One of the, let's call it, good problems to have of a booming stock market and IPO market is that, it's something that's come up on our show a lot, is that foreign investors are looking at many of these companies listing here, and they really don't have a good idea of who these companies are because they're really coming out from very small areas and they're listing in a very big way. And the reason I frame it that way is we've heard a lot from the people that we speak with. There needs to be a lot more coverage and analysts in the city that look at these Chinese companies. Based on your conversations with players in the industry, do you get a sense that hiring is about to even pick up further to supplement this red-hot IPO market?
I think, generally speaking, corporate promotions or helping the investors generally understand the companies better is an ongoing agenda. Like, for example, the Eastern Asia Financial Forum, apart from the usual financial agenda, we also have a dedicated business summit to facilitate more Chinese companies and global companies to reach out to investors in this part of the world.
Right.
We cover like new energy, new consumption, and even other types of new technologies. The focus of this forum is really, as you said, to bring these companies closer to investors and to make investors better understand their structure, their business plans, and also their future developments in the region. And I think this is something ongoing that we are doing. And forum is actually one of the many efforts that we have.
Yep. I mean, gold is such a big topic here right now on our shows, right? We're talking about 5,000 for bullion right now. Hong Kong has kind of made this pledge to increase the city's capacity, right, for holding bullion. We're talking about 2,000 tons now from 2026 to 2028. Can you tell us a bit more about the progress made so far? What's the current capacity?
What we are trying to do is basically to view the whole value chain from storage, but also to trading of products. Because after all, our commodity is a bit different from stock and also bonds, where what you see is the importance of storage, because otherwise the price would not command credibility. That's why, as a start, the chief executive already set out his policy address that we are going to increase the capacity for gold storage in Hong Kong in 3 years by up to 2,000 tons. And half of that will be attributed to our airport authority. And another bit that we are now doing is on the processing side, in order to allow global firms, Hong Kong firms, to take advantage of the processing and smelting facilities in the Greater Bay Area, in particular Shenzhen, to do their processing. It's also an arrangement that we already have in place with Shenzhen to do that. And the core of that whole value chain, I would say, is the clearinghouse. Because after all, right now, as you can see, the global gold market basically is ultimately dominated by 3 players, UK, US, and China. And we are actually working very closely with Shanghai Gold Exchange with a view to actualizing this clearinghouse for OTC contracts, which will be in trial operations this year.
Okay. And you mentioned you're chairing that one here in Hong Kong. Okay, so in terms of gold storage, a lot of people are talking about that. So you mentioned half of the capacity over the next 3 years will be down to the airport authority. The other half will be somewhere else.
Yes.
I guess you can't share exactly where the location. Otherwise, that's counterproductive. Let's put it that way. Can you give us a timeline, though, of when you expect the capacity to come online?
We're talking about 3 years. Because after all, as you can see, a lot of the demand is already there to put in gold in Hong Kong and Asia.
Right.
It's a way to diversify the portfolio, not just in investments, but also in storage. That's why our right now time frame we're talking about is 3 years to increase the capacity by 2,000 tons. And another thing I also want to cover is that in terms of the value chain, apart from the storage, apart from the smelting facilities, apart from the clearing side, we're also looking for more products. And that's why our Hong Kong Stock Exchange will also relaunch its gold futures. And at the same time, we are providing relevant tax concessions for family offices and also funds. If they are investing in precious gold, we'll also provide them with relevant tax concessions for that.
Right. And we will have gold futures in Hong Kong?
Yes, we already have that. But they are relaunching it. They are relaunching it.
Okay.
So better products, is that your way of differentiating itself from like a London, which is the dominant global trading sort of hub? What more can you do beyond infrastructure to really attract a lot of big commodity trading houses and the like to really kind of trade gold here?
I think similar to every market, there are two sides to it, demand and supply. What the government is doing is already on the supply side, infrastructure, as I said, the clearinghouse, and also at the same time new products. But on the demand side, we are going to have an industry association set up by the industry players in Hong Kong, regionally and globally, in such a way that they can do the promotion for us, in particular for the Belt and Road region and also Asia. Because generally speaking, I think Asian investors has a special appetite and also preference for gold in general.
Talk to us about other assets that have emerged. So I believe you have big plans around crypto this year and also private credit.
I think generally what we say is digital assets, to be more specific. There are two pieces of legislation that we are now putting together. One is about the regulation of the digital asset custodians, and the other is the regulation of digital assets OTC trading. So all these two documents are already been consulting the market, and we got favorable feedback in terms of way we do it, and so we have put them into law this year.
24-hour trading on stable coins. What's your thoughts on that?
In fact, in terms of the digital asset space, right now we already have two legislations in place, stablecoin, and at the same time the regulation of digital asset exchanges. So what we see is that we are continuing to build more regulatory blocks to this ecosystem, as I said, custodians and also the OTC trading, and to ensure that this market can grow sustainably.
Okay.
All right. Christopher Hui, thank you so much. We believe you're busy, of course. We will let you tend to the guests.
Yep.
Thank you so much. Christopher Hui, the Hong Kong Secretary for Financial Services and the Treasury. All right, Shery, back to you.
Yeah, and you guys have plenty of other guests, of course, coming up. David Ingles and Yvonne Mann, they're in Hong Kong out of the Asian Financial Forum all morning. They're talking to Morgan Stanley about their deals outlook for 2026. Also, Federated Hermes joins us to talk investment strategy, and we'll be hearing from the World Gold Council as the metal shows no signs of cooling. We have more ahead on the Asia trade. This is Bloomberg.
Let's take a look at energy prices. The softer dollar backdrop typically is supportive of these assets, but what stands out amid the bad weather in the U.S., and I think there you're seeing live pictures out of Virginia, is the surge in natural gas futures. Almost 18% now because there are supply and demand factors, not just increased demand for heating and for plants across the U.S., but also how there has been about 10% of U.S. natural gas production that's been knocked offline. So you're seeing there natural gas past $6 for the first time. More ahead on the Asia trade. This is Bloomberg.
Take a look at how the Japanese yen is trading. We continue to see a little bit of strength against the U.S. dollar, a 5-week high against the greenback. This after the biggest rally since the summer, and all to do with intervention watch. We have heard from Prime Minister Takaichi that they're keeping a close eye on any abnormal moves in the Japanese yen. Not to mention that we heard reports that the New York Fed actually carried out a rate check with financial institutions about the yen, and this all coming at a time when we're hearing from Japan's top FX official Atsushi Mimura saying that they're keeping a close contact with the U.S., although he declined to talk in more details about this potential rate check. So let's discuss all of this with Bloomberg FX and rate strategist David Finnerty. David, I mean, is this time any different for the Japanese yen, or is this just another dead cat bounce?
I think this time is slightly different because normally it's just the Ministry of Finance who are speaking about potential intervention. Now, according to reports from Friday, the Federal Reserve Bank of New York was also doing rate checks. So now it becomes actually two sides looking into, shall we say, halt the dollar's rise against the yen. So that's, I think, the big difference. And I think it's that second part, the Federal Reserve Bank of New York, that's really sort of caught the market by surprise. Because even though Bessent has had comments saying, OK, we're watching protecting the yen and dollar yen, etc. We haven't till recently seen this sort of potential intervention, or at least a step towards intervention from the US side. So I think that's why it's a bit different. Historically, you do have, MOF threatens to intervene, then yen will strengthen, then it grinds back lower, and then eventually there is some intervention. I think now if you're trading dollar yen, you're a bit more warier than normal, because you're going, well, okay, I'm not just against the MOF now, I'm also potentially up against the Federal Reserve as well. And what level they decide is too much is, of course, another thing. So the general underlying trend, as far as trades would say, look, theoretically the yen is still going to weaken more, but now I'm against a big headwind of potentially the Federal Reserve and the Ministry of Finance. How much do I want to gamble on that? So it'll be interesting to see if it does drift back towards the 157s, 158s, or do people to say, look, it's 155, it's fine. If I'm, say, a hedge fund, do I look elsewhere for trades like the Aussie or the Kiwi being very popular trades, because obviously both those central banks are potentially near hiking mode. So people may go, look, there's other trades to be had elsewhere. Dollar yen at the moment with these inherent risks could be a bit too risky to trade.
Yeah, on those risks for dollar yen also, we are seeing the Bloomberg dollar index slipping to the lowest level since September. There seems to be a couple of fresh reasons to be bearish on the dollar. What are you hearing among traders in terms of positioning?
Well, certainly today in the cash market was basically sell the dollar. I was told sell the dollar against pretty much anything you can. Obviously, there's certain currencies that are slightly more preferred, said like the Aussie, the Kiwi, the Euro is being popular. Once these currencies break out of ranges, hedge funds tend to get more interested in purchasing them, particularly if the currency breaks out to the upside. So you're starting to see the dollar general weakness. I think it's important to remember regarding the dollar. I would go back to something Scott Bessent said back in July about the strong dollar policy. He said, look, the price of the dollar is not as important as basically the strong dollar policy refers to the dollar maintain its reserve status in the long run. So that's as far as he said, assuming there's a chance his policy hasn't changed. It's like, hey, as long as it's reserve currency, the rate could be high, could be low, it is what it is. But that does sort of augur for like, hey, if a dollar was to get weaker, they could go, that's fine, as long as it's viewed and adopted as the main reserve currency, that is fine with us. So I'd go back to those July remarks and sort of remember those going forward, because at the moment you are seeing the idea of, yes, it's the Federal Reserve may intervene to prop up against the yen. They haven't mentioned any other currencies, but the market will go, yes, but it's basically everything against the dollar. And therefore, if you're going to prop up the yen, what tends to happen is other currencies just get bid naturally in default against the dollar. So you're seeing the euro, which carries the biggest weight in the Bloomberg dollar index or in the dollar spot index. So I keep an eye on that currency in particular, because if that gains more traction, certainly if it goes above 119.19, which is recent high, you may see more people say, look, let's join that trend now, push that towards 120. And because it's got such a big weighting, if the euro goes higher, by default the dollar and the dollar index will go lower.
A little bit of a different narrative, but yes, you are seeing also Asian currencies gaining ground on the downside of the dollar, right? We're talking about the Malaysian ringgit, for example, at the highest level since 2018 against the greenback, and even the Korean won strengthening, and we know what the issues have been with that currency. So how does that bode for Asian FX?
Yeah, it does go. You're right. Even the currencies, particularly mentioned the won, which have been under pressure recently, they are benefiting. It is basically a broad dollar sell-off at the moment. Again, things could change in coming days, but certainly at the moment the risks are towards dollar weakness, and hence anything by default is winning. Except it would be the won, the Malaysian ringgit you mentioned to reach the high, even the Singapore dollar's very near highest in several years as well. So for EM currencies, it's been very good, but it really is basically in FX space, it's the dollar versus everything. And if you're in that everything basket, which includes obviously EM, then by default you are winning. I think the question becomes from traders, how do they want to trade that? Do you want to trade the dollar side of the equation, or because it could be a bit, you've got the Federal Reserve this week, data's still quite strong. I mean, I would remember one thing, the US data's not been that bad. So at the moment we have intervention talk, but you could see in coming weeks the idea of like, well, actually the US outperformance performance on an economic side may start to gain traction, which would be dollar positive. So at the moment, it's sort of it's sell dollar now. Will that continue in a month's time? Data in the Fed may have a bigger impact on that.
Yeah, that's a good point about the potential for a reversal at this stage. David, great to have you on a day like today. FX and rate strategist David Finnerty. Let's get to some market calls we're following as well. Strategists at Brown Brothers Harriman believe the yen has topped out and is now on a path towards the 140 to 145 range. They argue that concerns over Japan's fiscal recklessness are overstated, noting that economic growth continues to exceed borrowing costs. They also point out Japan's mix of loose fiscal policy and tighter monetary policy is supportive of the yen. As for moves in JGBs, State Street Investment Management notes that recent swings show global political uncertainty is amplifying market reactions just as much as Japan's own political risks. And that means threats run both ways, not only from Japan to the world, but also from the world to Japan. Its APEC economist thinks one thing that could help calm nerves and boost market confidence would be an LDP majority in the upcoming snap elections. Shery.
And Avril, here in Japan as well, we'll get key economic data on Friday, including Tokyo CPI for January. It could give the BOJ room to proceed cautiously, although Bloomberg Economics still sees a hike in July. Also this week, the Fed expected to keep rates unchanged, this amid global economic uncertainty and, of course, pressure from President Trump. Peers in Canada and Sweden are also likely to hold rates steady. We'll be getting fourth quarter inflation data from Australia this week. The report could underpin the RBA's hawkish bias and spur speculation over a potential rate increase in February.
Now, Shery, the trade rift between the U.S. and Canada also in focus, and it's widening with President Trump threatening 100% tariffs on Canadian goods to the U.S. if Ottawa makes a trade deal with China. For more, let's bring in our chief North Asia correspondent, Stephen Engel, in Hong Kong. So, Steve, where do things stand now when it comes to this threat of tariffs?
Yeah, well, there's been a barrage of social media posts from the President Trump, that is, sort of threatening those 100% tariffs on Canada. This follows, what was it, a week and a half or so ago when Mark Carney was in Beijing, and we saw those deals that he made with Beijing to essentially alleviate some of the tariff pressures the two countries have had on each other. Canada had a 100% tariff on Chinese EVs. He relaxed that down to 6.1% for 49,000 Chinese EVs to come into the Canadian market. And to reciprocate, Canada got rid of its 100% tariff on canola or rapeseed. But it does not, according to the Canadian minister responsible for trade with the United States, Dominic LeBlanc, it does not necessarily mean that they are pursuing a free trade agreement, a broader agreement with China. They were just resolving some of the more outstanding and pressing tariff issues. But Donald Trump essentially saying, though, China will eat Canada alive, completely devour it, including the destruction of their business, social fabric, and general way of life. And essentially, Donald Trump is saying if Carney thinks he's going to make Canada a drop-off port for China to send goods into the United States, he is sorely mistaken. So again, there's going to be some more war of words between the two and sort of amplified on social media by President Trump.
Yeah, those are pretty aggressive threats coming from the president. And they're seeing now Secretary Bessent also doubling down on tariff threats as well.
Yeah, this seems to be a pattern that I've been seeing. Donald Trump will essentially say these things on social media. Then Scott Bessent will make the media rounds. He did that Sunday in the United States, essentially saying if they see that these agreements between China and Canada expand beyond what has already been announced, then there could be further penalties, not only the 100% tariff on all goods Canada sends to the United States, but also more penalties and potentially tariffs on China if that is the case. This is Scott Bessent, what he had to say on the Sunday talk shows. Oh, we don't have that soundbite. Well, essentially, he said what I just said, that they're not going to allow those goods to come in from China through Canada and into the United States. Because, again, these two economies are highly integrated between, the auto parts and also, of course, the United States buys a lot of oil, buys a lot of metals, and buys fertilizer. So we'll have to see how this one plays out, no doubt.
And Steve, how is Canada working to further diversify trade away from the U.S., which, as you say, closely integrated for the moment?
Well, they're not going to back down, and they're going to further diversify. At least that's the messaging that's coming from various ministries. I mentioned about the trade minister in charge of trade with the United States, but you're also seeing the foreign minister going to be making a trip soon, or is saying that they're not going to back down. Anita Anand says Canada would not be derailed in its effort to diversify trade away from the United States. Also, the energy minister, Tim Hodgson, will head to India soon, adding that Canada won't be putting all of its eggs in one basket. Actually, that's a quote attributed to Anita Anand. They are expected, the two countries, India and Canada, expected to at least explore cooperation and potential deals in critical minerals, in uranium, and liquefied natural gas. We also know that Mark Carney, the Prime Minister, does plan a trip as well to Australia and also to India. We'll have to see what transpires there.
Stephen Engel, our chief North Asia correspondent, there with the latest on trade. We have more ahead on the Asia trade. This is Bloomberg.
Let's take a look at how futures for the Greater China region are shaping up. We have been seeing Japanese stocks really pulled under by the resurgence in the yen. Futures on the Hang Seng are pointing to a bit of upside and perhaps a bit of flatness when it comes to the TAIEX. A tale of two economies looks to be driving the Chinese stock market, with investors raising bets on beneficiaries of an industrial export boom. And this is at the expense of those stuck in a consumption slump, so to speak. Our Asia equities reporter Winnie Su joins us now. So Winnie, what's the setup for today and how does the medium-term trajectory look?
Yeah, morning, Avril. I think it is quite interesting to see how the economy is playing out right now, right? And that does have a lot of implication for the stock market as we see how stocks are under a bit of pressure these days. And we're likely going to see that for this week as well, just driven by the lack of catalyst. But kind of just recapping back to what has happened is that, we see all these interesting reports coming out last week after that set of eco data showing that there is that divergence continuing in the Chinese economy, because on one hand you have very weak consumer demand numbers, but on the other hand you've got that very strong industrial outputs and exporters, and investors like, for example, BNP Paribas, they're saying that this is basically this two China story that investors need to navigate right now as they put more focus on sectors like industrials, materials, and tech that has a bit more strength there. And JP Morgan Asset Management is actually saying similar things, that they are betting on stocks that have that glowing global theme that will actually benefit from the earnings trajectory, while investors are still quite cautious and taking a step back from betting on these consumer names.
Talking about caution, given, of course, the ongoing ructions around these tariff threats, whether it's Europe, and of course we have seen that potentially trade truces with President Trump don't necessarily hold on. We're seeing now investors hedge, especially in China.
Yeah, exactly. That's actually what we saw last week, that investors are buying more puts when it comes to the Chinese large caps and also internet names. And one of the key reasons, like you mentioned, is this concern around potentially further geopolitical tensions between U.S. and China. And that came after how China was they were talking about how the U.S. shouldn't be doing these trade deals with Taiwan, and how that is draining boosting Taiwan's economy with these big investments into the U.S. And beyond that, actually, we were talking about how Chinese stocks losing a bit of momentum these days because of all these cooling measures from regulators trying to engineer this slow bull run. We are talking about seeing these massive outflows from a national team over last week, over the past few sessions, and also China tightening these margin financing rules, as well as them clamping down on the high-frequency trading. And just last Friday, we were talking about how now they are thinking about tightening further rules for Chinese companies interested in selling stocks in Hong Kong. So with all these measures coming through, as well as these external factors and pressure from the geopolitical side of things, for now, it seems like we are facing a bit more headwinds when it comes to the near-term outlook for the Chinese stocks.
Bloomberg's Asia Equities reporter Winnie Su there. And talking about geopolitical tensions, we understand Chinese officials are telling Alibaba and its peers to ready orders for Nvidia's H200 chips. This suggests Beijing is close to formally approving imports of the products essential to powering AI. For more, let's bring in our Asia tech correspondent Annabelle Drulers. Annabelle, so where do we stand on these H200 chips?
Yeah, this has been sort of the really big question after we had that green light from Washington that H200 chips could be sold to China. It was that question, would Beijing actually allow them to be imported, essentially? And what we're hearing is that we're actually getting a step closer at this point. So sources are telling us that Alibaba, Tencent and ByteDance can now move to the next stage of preparations to buy the H200 products. So what we're understanding is that these companies can now discuss the specifics of exactly how many chips they'd be looking at ordering. So it's an in-principle approval at this point. That's what we're hearing from sources. But it doesn't, of course, mean that China's big tech companies can turn their backs on homegrown alternatives, because in that void of Nvidia, names like Cambricon, for instance, Huawei have really moved in more threads. There have been plenty of different Chinese chip names to try and plug that gap, essentially. So sources are telling us that Beijing is going to be encouraging these firms to approve or to continue buying at Chinese semi-names, but in addition, they can actually look at buying these H200 chips as well. So if it goes ahead, it's obviously a big win for Nvidia. We have seen it essentially locked out of the Chinese market over the past couple of years. It's saying it still sees it as a big opportunity. Nvidia says it hasn't spoken to these Chinese chip names or tech names in particular, or on the specifics of what these orders could look like, but we have been reporting previously that the names like Alibaba, ByteDance could be looking at around 200,000 units each.
When it comes to Nvidia, Bell, of course, we have to wait a couple of weeks more until we actually get the earnings. In the meantime, we're going to get a couple of other big tech names reporting this week. What are you going to be watching for in particular?
Yeah, I mean, we're at the start of another big earnings season, essentially, but just what we've got coming up on the docket, there's Microsoft, Meta, Tesla reporting on Wednesday. You've got Apple on Thursday. That's all of just this week. Next week, you get to Alphabet and Amazon, and then you have Nvidia, which will end February, again, a few weeks away, but still coming in February 25. So it's going to be a really big test of where we stood at the end of last year, because, of course, AI and tech has essentially led the rally in US stocks for the past 3 years. It was tested at the end of last year because there were lots of concerns around the amount of spending. There were concerns around cyclical deals. There were concerns that ROI actually wasn't coming in just yet. So that's going to sort of be one of the key themes going into these numbers. So it will be a bit of a health check. Broadly for Mag 7, our Bloomberg intelligence team is that we should see earnings growth of around 20% or profit growth. That would actually be the slowest pace going back to 2023. So the bar is essentially relatively high. But in terms of the names to watch in particular, I think Microsoft will be one of the ones to stand out, because cloud business is where you see that early ROI. These are companies like Azure, for instance, that business unit of Microsoft, but certainly renting out that compute power. It's seeing that demand from corporate clients as well. So it's a good sort of health check on how the industry is performing. But overall, we do, of course, see CapEx. It's going to continue trending higher as well. And that's another big theme, but just across the board, because to operate that sort of cloud business, it does require heavy spending. And we are expecting CapEx to tick up. So there's lots of, again, going back to that theme of ROI, it's probably going to be one of the key words in these numbers.
Belle, thank you so much. Our tech reporter, Annabelle Drolers. And we have more ahead on the Asia trade. This is Bloomberg. Let's take a look at precious metals, gold in particular, that has been rallying at breakneck speed, now reaching yet another milestone past the 5,000 handle as the U.S. president reshapes international relations, prompting a rethink on U.S. assets. We are also seeing how the U.S. dollar posted its biggest weekly decline since May and is extending those losses for the moment. And in general, this does make some of these precious metals cheaper for buyers to pick up. So that rally in gold, but outpacing those gains today is what you're seeing in silver as well. Outperformance versus the yellow metal. Shery?
Yeah, we would be following the miners if Australia wasn't closed today, but we are seeing the Aussie dollar being bid higher, including the Korean won as well, a bit higher at the moment, and the Japanese yen also gaining ground against the U.S. dollar. This, of course, as we are on intervention watch here in Japan. We have heard Prime Minister Takaichi warn about abnormal FX moves, and the New York Fed contacting the financial institutions there for a rate check. That's it from the Asia trade. Our markets coverage continues. The China show is next. This is Bloomberg.